Hello, good morning. Greetings to everyone. I hope it's Monday. The question is not easy, but let's see what we can do. All right, so in today's session, I'll be solving the last year's question, right, for cost accounting. Just a suggested solution. It doesn't mean everything is correct too, but mine suggested solutions. So if in case you find any problem with any of the solvings, you can reach out to my DM and then help me because I also need help. All right, all right, all right. So this is it for that particular question. And once again, I'm Maya, and this also known as CFO. All right, so it is the instructions that was there. So let me see if I can do this as quick as possible. Now, this is question one. Question one is under inventory for the accounting for inventory. So let's keep this. If in case you need this particular paper, you don't have it and you want this PDF, you can reach out to me. If in case you don't have my number on contact. Because I think everyone on this platform will have my number. But if you don't have it, then you can reach out to me. 0244724495. Then I'll send it to you. WhatsApp or on Telegram, any of them. All right. So let's begin. Mr. A, sorry. Aramat Enterprise commenced business as a distributor of Clean Shave, a brand of electronic shaving sticks. Miss Yeb Matilda, who is a proprietor of Aramat, used her group office to obtain an overdraft facility to the tune of 7 million from her bankers. So in the month of October, these are some of the transactions they made. They purchased 120 packets of shaving stick. And then in the month of November, they also purchased 80. So in the month of October, they purchased 120 at 38,500 each. And then in November, they also purchased 80 at 48,000 each. And then they sold 40 packets at 56,000 each. In December, they also purchased 160 packets and then at 48900 each. And then they sold 200 packets at 68,000 each. Paramount makes, just watch this very well. Aramat makes all purchases in the first half of the month and sales in the second half of the month. All purchases were in cash. All purchases were in cash. 50% of December sales were made on credit, meaning that the other ones were in cash. The following payments were made during the period: advertising and publicity of 76,000, insurance of 14,000, and then 4,000 were prepaid as at the period end. Some additional information is here. During the physical stock taking at the end of the period, it was revealed that 10 packets of the sticks were broken due to its fragile nature and cannot be sold. The total cost involved was 464,600. And then B, 5 packets of the last batch purchase can be sold for only 48,000 each. Right? Remember, the last batch was bought for what? 48900. They say it can be sold for, it can be sold at 48,000 each. Then C, Aramat has given out 10 packets valued at 480,000 as gratis to her church members, taking 5 packets costing 48,000 each for her private use, and giving 6 packets valued at 293,400 as year-end gratis to her consultant. It was also revealed that her sales assistant, Araba, soon has stolen 2 packets. Oshevio. Obano Koshevio, at 76,000 and has agreed to pay in 3 equal installments with effect from 1st January 2024. We are required to prepare income statements of Aramat for 3 months, for the 3 months period ending with the 1st December 2023, and her statement of financial position as at the date Aramat uses perpetual inventory system and first in, first out stock valuation method. So now what we are going to do is come in. All right, so now let's row. I wanted to use the Excel to solve the FIFO stock sheet, but I received a request that, and I'm using Excel, they don't actually get the steps, so should be writing. I have to write. All right, so now let's start. So question 1, Aramat Enterprise. So we have to first begin with the stock sheet. We'll begin with the stock sheet. Equal method. We normally have it divided into, let's say, we have purchases, so, or you can put issues also there. So, mind you that this FIFO listing doesn't really attract. You are doing it in the grounds. Make sure you do it fast. So, quantity, rate, quantity, rate, quantity. and calculation is remember, so I'm putting 3 zeros at the top. All right. That's it. It should make your screen survive. So in the month of October, so let's bring the until 8 and make us okay, so again, we have October. For the month of October, what happened was the pitches 120 parts, right? So 120 at the rate of 3,850, but I have 3 zeros at the top, so it will be 38.5. Then the total value is going to be 460. This for that month. So I come through to the balance and I also put the same thing there. One, two, three, 5, and then 4, 6. Now, November, we purchased 8 at 48, and then the value is going to be I will repeat the same thing here. Okay, so we can see that in the same November, we made some sales here, right? So let's go and then make the sales. Remember, we are using what first in, first out inventory valuation, right? We are using inventory. We are using first in, first out. So we are going to issue this based on first in, first out. The one that came in first, that's what we are going to issue. So for us to do that, we are going to use which one? They bought 40. So 40, we had 120 first. So 40 can 120 can cater for the 14, and then there will be some vendors. So 40 at the sales side. Remember, here is the sales side. So sales side, let's clean this. Otherwise, it will look like 140 inside the first time. Right again. All right, so 40, and then the first in's rate was what? 38.5. So use the same thing. 38.5. And then we are going to get 1,547. Then now our balance will now be 80 from the 120, the same rate. And then this thing is going to be then we bring this balance over down to 80 at 48, 38, 4, 7. Now in December, let's go to it. All right, so now December we made some purchases. We purchased 160 packs at 489.5, 48.9. And then the total value is 7,824. Now, one sixty four 8.9. All right, so we made some sales also in that month. And the sales was what? 200 packets, right? So someone will be asking me, why are we not issuing them based on the prices we are seeing with them? On the stock sheet, what we want to know is we want to know the closing stock value in terms of the amount we bought it, and also the cost of sales, right? So we don't use selling price to value cost of sales. That's why. So in the stock sheet, whenever you are issuing something out, you issue it at the purchase price, right? Not at the selling price. But we will use the selling price later. So now we are selling 200. But looking at it here, we wouldn't be able to sell 200 straight from this was the balance left after selling the first one, right? So now what we are going to do is we are going to sell all of that one It will be 80 at 38.5. The total value was 38. Then we sell the next 80. At 48. That was the rate there. Then our total this will be 3, 8, 4, 7. Then now, so far we've sold 160. So we just want 40. So what we are going to do is we are coming to take the 40 from this 160. We are coming to take 40 there. Right. So we take 40 there. 40 at that cost purchase price, which was 48.9. And then the total value is going to be 1956. Now, after taking 40 from it, to be left with 140. Okay, 120, sorry. At the value of 48.9. And the method was 5, 8, 6, 8. Right. Today is how score sheet is going to look like. All right. So now, let me close it. So now, what we are now going to do is, let's find the value of our closing stock here, even though it's already closing stock going to be equal to 120 packet times AFC 4, 8. You see here, I'm writing in full because I'm not writing in the box where I've placed some 3 zeros at the top. Okay, I'm bringing everything. This is going to be 5, 8, 6, 8, 3 zeros. So this is going to be my closing stock value. Now you have to be doing this quick because in exam, I think this will be around 3 or 4 marks different. You have to do it quick. The real job is down there. The real job, what they are really telling you to do is what? Prepare the income statement and then the statement of financial position. So that's the real job and not what you are planning to spend all your time on, especially the question. Right. So now, in doing income statement, you need some values. We'll be needing sales, we'll be needing cost of sales, and the likes. So let's do some workings for them. Workings 1. Remember, the question paper told us to what? To show all workings in your answer booklet. So we are showing all the workings. So workings 1, sales. Today is where we are coming to do what? Take the actual sales value. So the first one we did was what? 40 times 56,000. Then we are going to get what? 2 to 40,000. Remember, they told us that 50% of December sales were made on credit, meaning that this is cash. This particular one was made on cash because it's November. Then the next one is what? 200 times 6, 8,000. And we are going to get 1360. Remember, 50% of this, 50% will be cash. Then 50% will not be cash according to what the question is telling us here. So we are done computing for sales, right? So we can do our income statements here. Income statement. Double 3 zeros. Double 3 zeros. That's those sales. Which is what equals 1 is we add them, adding, getting 1,000. So now that is going to be my sales revenue. I think it would be better if I do a working similar. Now our next is what cost of sales. Remember that in level 400, we don't do sales less cost of sales where we are going to do add purchases and the likes. Do it as workings. So second workings, cost of sales. Cost of sales normally starts with what? Purchases, right? So our cost of sales is going to be our purchases we made. So we have to also work out for purchases. Or let's just come and do our purchases here. So these are purchases. Let's add all of them. So in total, we are going to get 1, 6, 2, 4. When we add this plus this plus this, right? We are going to get 16284. So we'll go and then dump everything in there. So 1, 6, 2, 8, 4. Remember the reflect 3 zeros. So let's just reflect. Yeah. Then there were some direct costs in the questions that wasn't actually attributed to selling the item. So we have to add them back uh, since they have been accounted for. So we have 10 packets of the sticks were broken due to its fragile nature. So we solved this particular question in class, uh, a similar one, and then the TA told us to add it back. So we are coming to this here. So of the stick were broken due to its fragile nature and cannot be sold. The total cost involved is 464,600. Right. We put the same thing to the broken stick. Four, six, 4, 6. Yeah. And then also told us that the last batch pitches can be sold at what 4800. So we add the difference back to the cost of sales. So what we are going to do is that uh the last batch, was actually purchased for 48900, right? And then we can only sell it for 4800. So the difference there is the 9, right? So it is going to be 900 times 5. That's 5%. We are going to get 455, right? Then now, sorry, okay, we're going to get, hey, why is the time running like that? Hey, we're going to get 16753,100. Then we less closing stock. This was how we were taught. That's something to save. Coming quarter and coming in the same that. Less closing stock. Closing stock, as we computed, is what? 5868 and 68,000. So 5868,000. Then we are getting 1088 for cost of sales. Right? So let's go to the same thing there. 10885. There. Now gross profits going to be uh 495. Yeah, less expenses, right? When it got to the expenses, it didn't do any work in school. So they brought everything here like that. So the expenses included adverts, the adverts and publicity that they paid for, which is 7,600 euro, right? So say 76,000. And then insurance. Insurance was 14,000. And then there was prepaid in it. If you take it out, then it will be left with 10,000. Now, the next item in line here is they treated the gift that was given to the consultant as an operating expense. So here, giving giving 6 packs valued at 293,400 as a year gift. We should the same thing also here. Uh, consultants and also be treated here as 29400. And let's add all of them. And we get 379,410. We subtract it from the sales, and we get 4,575,000 as our net profit. So this is going to be our net profit for this particular one. Then we now move on to our statement of financial position. We start with our non-current assets, where we don't have any of them in the question. It comes to our current assets. The current assets will start with inventory. For inventories, we have to do some adjustments. So let's go and do the adjustments. Okay. When you see account, because asset adjustments are. So the balance that was brought forward on the stock sheets will come here. Just what? 5. After the people, we had 5, 8, 6, 8,000. Now, anything that was done to reduce the inventory, this is where we are going to do. So let's start first. Some was broken, 10 packs was broken, and then the value was 4,600. So broken, 4,640. Then this one too was what the last batch that can be sold for this. So we said we are going to last batch is going to be 900 times 5 because initial price was 48900, but now you can sell it for you. We state it to its normal price, we get 5,500. Yeah. Then the one that was given to the church. The church 480,000. Then the next one, 5 packets. He also took 5 packets out for his private use. Then it's going to be private use is going to be 48,000 times 5 get to 40,000. Then the next one is 6 packet value, so consultant to come here. Consultant coming in 2, 9, 3, 4. Now the lady also stole some Pakulisu was Val's Eba. You also Arabas of wire for Atom. It's valued at 76. So I think this is all here. We close this account. Right. The total is going to be 5,868. 5. And the balance carried down 4,309,500. The balance go down 4,309,500. So this is our first case. So let's go put it there. Then she it's three. And it is so move on to our receivables. Remember, our receivables would be 50% of, they told us that 50% of the sales in December was what's made of credit. And that's going to be our receivables. And then now it was reviewed that the assistant Aramat was stolen 2 packets valued at 76,000 and has agreed to pay. So that's also a receivable, right? So we create these two receivables. It's a fine was here. Receivables here. Oh, receivables here is now going to sales. It is 50% of December sales. So December sales was 136,000. 50% of 136,000. 136,000. we are going to get 680. This is 6,800,000. 6, 8. And then Araba, it was 7, 6. If we have to close it, I'm going to get 6, 8, 7, 6,000. 6, 8, 7, 6. This is 7, 6. Receivables were 4. Then we have some insurance prepaid in there. It is for 40,000. This is the data that is security assets for us. Wait, 4,000. Now this is going to make our total assets to be 1,118,955. So financed by ATM liability, right? Acct. We started a business with an overdraft of 7 million. So equity becomes what? 7 million. Then less drawings. Hey, add next profit. Net profit, according to our statement, the income statement was 457,557. 457. Then less drawings. So according to the explanations I received, the drawings that we are going to calculate is what we actually took out of the business for a personal use. So what we are going to use for this calculation for the drawings here is going to be the church and also the private use. So I'm going to use the church for 80,000 and then what she used for the private. So we can also do a workings here. So six workings, six our drawings. It's going to be 4, 8, then the private use, which is 5 times 43. It's really nice. Add or we are getting the example the same thing. Wait, 5, then we are lessen the drawings of 7. And we are going to get 1, 0, 5, 5. Now, think after solving 2 questions, I will pause and then solve another one in a different video because the video I think. So now what we are going to do next is to bring the overdraft since they are moving or they are working with overdraft. So we bring an overdraft here. They are like current liability overdraft. Overdraft was 7 million. Now let's keep working for the overdraft. Now overdraft received capital 13 million, right? And then received some sales on cash. So the sales that was received on cash, the sales that was received on cash is going to be this 22400. So this one, and then 50% of it. So we are finding 50% of this, which was 6.8 million plus this 2.24 million. Right, that's the same thing I'm going to do here. So after finding that, we are going to get, oh, where's my screen? after finding that you are going to get an over sales of 9 million, or and then we purchased everything with cash. Answer the question said. All purchases were made with cash. So purchases, right, which we completed at the top there. And then we said, what is the purchases for? 1,628,4,000. So 1,624. Now we paid those assets. The following payments we pay those assets. So add 6,000. And then we also paid insurance. Even though there's prepaid, but we paid 14,000, so we have to take that one out. And close this account. Now the total is going to be 1,627. Wow. Percent of 1,637,4. Then the balance carried down is going to be 3,4,000. Balance go down, which is still one overdraft. If the bank should have been, if the balance should have been to the, if the balance were down, should have been to the debit side. Like we are not having any overdraft, but since it's still at the credit side, we still have overdraft. Let's add it. 3,3,4. 108. Having 1,1,1,2, 5. Equity. So you see, not the normal people, because we saw people and then people, we thought everything was okay and simple. It was balanced and better. I have another way I can also do and then balance, which will be having different figures. So this was what was approved. That's why I'm using this thing. So this is it. Cost of sales, stock sheets, income statement, The statement of financial position. The hands is basa 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 because I'm using my bare hands to write on this screen. Bear with me. That's why it's a bare hand. All right, so let's move to question two. Question two. D5 Alliance Limited is a manufacturer of protective products, champion for the youth. One workforce of the company is made up of two categories. Category A, that's responsible for what? Converting raw materials into finished products. They are involved in actual production. Category B, provides supervisory and services and support services while actual product is taking place. The following has been presented to you. So you can see that one is what? Actively converting raw material into finished goods. So that would be what? Attributed to direct labor cost. Whilst this one is just supervisory, right? It is what? An indirect labor cost. So you have to know this from here. Then the following data has been presented to you as cost management accountant for the month of November. So category A, the total hours recorded, clock out less in, and then everything. Then we also have the idle time. This is the productive hours, and then this is the idle time. Remember, the idle time is the time in which nothing is actually going on. Yeah, maybe something has happened and everyone is down, whether there is a shortage of material or there's light out and the lights, right? So this is the this thing is for category E, and there is it. And the overtime here is what? 4,500. And here the overtime here is 1,875. This is their basic rate. Their basic rate is 125 and then 100 respectively. Group bonus is this and this. Leave allowance this and this. Special security, social security this and this. And then TUC dues this and then this. Now they are telling us that overtime is paid on basic rates and it is normally to be able to meet company's production schedule. For the month of November, 40% of the overtime hours of both categories of workforce were to meet urgent requests of a particular customer. So what it means is that 40% of the overhead is going to be a direct, let's say 40% of overtime is going to be direct, whilst some is not going to be direct. So we are going to look into that very soon. So now, since the overtime was, the 40% was made to the customer's urgent need, it becomes direct, right? And then the one that wasn't part, like wasn't really needed by the customer will become indirect. So during tutorials, our TA said that when will I even get example? Let me see it. He said something. I want to just quote the same thing. Um, he said something. I just want to quote the same thing. I cannot find it. All right. So she said if an overtime is done at the request of a customer, it is added to overtime premium. So basically, it is what added to the direct cost. So that's it here. So now, since 40% was what an overhead, 40% of the overhead hours of both categories of workforce were to meet the urgent request of a particular customer, right? But still, it depends. If the if the overtime, sorry, is for category A, then we are going to include it in the direct cost. But if it is for category B, we are not going to include it into the direct labor cost, right? So now, the attendant has to prepare the payroll for C5 Alliance for the month of November 2023. That carries 17 marks. And then also give the accounting treatment of the payroll as above in the relevant books of account, right? So let's do that right away. I think we are 1 hour through. All right. So let me clarify this. So uh, whatever we are going to do, you see, overtime is paid on the 40% of the basic salary. So what it means is that overtime is being paid on 40% of this 125, right? So this rate is 125. So when you find 40% of it, we are going to get 50. So 50 times the overhead amount is going to give us the total. But remember, 40% of it is direct. So 40% of this is direct. In the same way, 40% times this overhead rate is going to give us 40, right? Eh, for this basic salary, it's going to give us 40. Now, that 40 times this, right? Remember, 40% of this is going to be direct. So we are going to allocate 40% of this in there. So let's do that. So now let's go to question two. I think for question two, I have to do the workings here and then go and solve it. So question two. So question two. What we are going to do first is we are going to do some workings and then get our overhead, the receipt overhead, the payroll, because that's what they are telling us to do. So overhead, is overhead. So the payroll is normally consisting of some um basic stuffs, right? So I'm coming to use the payroll. That's the payroll formula that I was taught in messages. That's the same I'm coming to do. So now I'll have category, then I'll have, well, this one will be like employee category, right? So now we are doing it for C5 Alliance. So this will consist of, now after this, we'll have basic salary. having overtime, having no bonus, having the allowance, having a gross pay now. And now come to our deductions. We have social security, social, then the next one is going to be TUC. Then we are going to have our total deduction. Then we are going to have our net salary. We have category A, then category. The basic salary for the first one, right? We're going to calculate the basic salary. Right. Now, basic salary. For category A, right? Remember, the work was 66,000 hours. Then the basic rate per hour is 1 to 5. So 6 hours times 1 to 5. We are getting 8,250. That's all for category B. Going to be 100 times 235. Then it works for 23,500 hours. Then the rate per hour is 100. So let's go to the same thing. Now, we are now on overtime. Remember the overtime, we have two. One is going to be direct, and then another one is going to be what? Indirect. But for the payroll, is their payroll. So we are going to put everything here for them. So it is 40% of their basic salary. So of their basic rate. So what we are going to do is 40% times 4,500 times 125, or the same thing for the first one. 40% times 125 times 4,500. The second one is going to 40% times this. Times this. The same, so it's equal to 0.4 times 4500 times 45. That's going to be the overtime for this one. And this one also going to 0 negative 0.4 times 1875 overtime times 1875. There's the total. And group bonus, let's get group bonus 71001775. Then the leave allowance, so they will just take the profit, 25,000. Gross pay is not going to be the addition of all this. So sum equal to sum of all this. And the gross pay for the second one is also the same. When we come to the deductions, social security is 35 hundred for this one, and then this one is 10 1 then then the TUC is 125 for this one, then this is 6757. Now our total deduction is going to be equal to some total deduction is going to be the social security and activities. This is the summation of it. Now our net salary is going to be the gross pay minus the total deduction. So it's going to be this minus this, then do the same thing for that. Let's go to down here for some. I just summing this. Right. And we'll be summing for all of them. So let's just track everything. That's right. As it's your mindset. Now, we are done with the payroll. But make sure that you do small workings for all the districts. So, for example, the overtime. I didn't, okay, I did for the basic salary. I didn't do for the overtime. You have to do it also for the overtime. Overtime, overtime is going to be 0.4 times 1 5 times 4500 for A. For B, it's going to be 0.4 times 100 times 1875. Right. But aside that, the rest is just picking and then dropping them. That's what I just did. So we are done with the first part. We say we should prepare the payroll of C5 allowance for the month of May. So this is the payroll, right? If you have any other move, you can use those things to. All right, so cross check. Everything is fine. Confirm, confirm, done. All right. So now, the next part is giving the accounting treatment of the payroll as above. Also give the accounting treatment of the payroll as above the relevant books. So now, the payroll, what we have here is mixed with either direct or indirect and then period cost. So that's what we are coming to do now. We are coming to divide the cost into direct and indirect and then period cost. So let's do that. So let's write here as direct. And let's use here see as indirect, then period cost. Period cost is the one that will be sent straight into the statement of financial position. So we are now coming to calculate the direct cost that was related to category A, category B, and then period cost expense. So now, based on attendance, based on productive hours, sorry, productive hours. Right. Productive hours here is what 62875. So for category A, it's what 62875. So equal to 62875 times the actual rate per hour. Right. That's the productive hours. Now let's also look for B. Equal to, or then maybe this thing was the actual productive hours. So 3 5 times C That's it for the productive hours. Now let's come down to idle time. Time that was spent for nothing, right? Now let's go for machine. Machine was attributed to category A, right? Just let's now it will come to period again because the idle time was used for nothing. It's a cost that has been borne by the organization, right? Even though they did nothing at that time. So equal to machine is 2125 times the actual rate per hour 125. That is it. Now idle time material. We have to say that a period cost. So remember when we were treating cost accounting under uh, accounting for labor, we said that we have two type of idle time. So we have the normal one, then we have the abnormal one. So the normal one is like normal in the sense that let's say you are producing, let's say cocoa, right? Before you mix the mori and then you put it on the fire. So the gap between you putting the mori on the fire, see you can spend like some seconds. That difference is what is a normal kind of idle time. Or let's say if you are supposed to transfer some good from process one to process two, the workings that you work that process two and then go and transfer the good into it is the normal idle time. But in the case of breakdown or shortage, it's an abnormal idle time. So with that one, it's treated as a period cost. That's why we are treating this as a period cost. So for the material, it's going to be equal to the 1,000 here times 8 raised 1 to 5. We are getting this. Now, the next one we are coming to do with is overtime. Remember, the overtime we have for category A and then B. Let's do for category A first. Remember that the question specified that for the month of November, 40% of the overtime hours of both categories of workforce were to meet the urgent request of a particular customer. So by force, that 40% in those particular uh, overtime will be used or will be a direct cost. So now it is going to be, let me put the workings here. Direct overtime for A going to be 0.4, which is the 40% times its rate, which is 125 times 40% again of the time. The time there is 4, 5, right? Remember the question said that overtime is 40% already. And now they are also located only the overtime hours, 40% of it was for what? The workforce. That's why we are doing this. So 40% for the overtime rate, 40% for what? The workforce. For the working hours, sorry. Now we are putting the same thing here. 0.4 times the 125 times 0.4 times the 4500. And then it's what we get for A. Now for B, it's also going to be the same thing for B. 0.4 times its rate times 0.4 of its overtime hours. So that's the same. That's, that's for the direct. So now the indirect part is going to the indirect. Thing, right? Remember, the 40% was what needed. So the other 40% is not actually attributed to be a direct cost. So since 40% was needed, 60% was in that listing for the customer. So 0.6 times 1.5 times 10. So 0.4 as usual, the normal overtime of the basic salary, the basic hourly rate times 0.6 of the 4.8. So the B2 is going to 0.4 times 100 times 0.6 times 1.8. So 0.4 times 125 times 0.6 times 4800. So 0.4 times 100 is 123 times 0.6 times 1875. That's it. That was so down with that one. And let's look at our leave allowance. For A, leave allowance for A. Leave allowances are normally treated as indirect costs. So for A is 25. Then first thing, how about personal bonus? Hmm, bonus. So group bonus is also what treated as an indirect. B is what 71,000. Then B, right? So uh, let's add all of them. Summing all of the same everything. All right. So that's it up to this point. And then now we know direct costs are what? Prime costs. Indirect are what? Overheads. And then this one is normally sent to the income statement, the period cost, right? So remember the treatment for prime cost, for example, here is going to be wages. We are going to treat it in the cost of sales as wages. So direct treated in the wages, treated in the wages, which is treated we treated as wages. The direct labor cost we have here will be treated as wages, and it will be in the what cost of sales, right? Treated in the cost of sales. Whilst the indirect will be treated as overheads, right? And then this overtime, so this one we treated as overheads. Then this one will be more or less like production overhead. But this one will be treated as a period cost with the expenses, right? And this is what I'll be writing for this capabilities. Right. So I think this is it actually for now. Let me close this one and then start another one. Okay.